The man who bet against the entire US housing market in 2008 and won is now making another massive bet. But this time he's shorting something much bigger, the AI revolution. Michael Burry has just placed $1 billion wager against the AI hype. And he's not the only one. We are going to show you the signs they are seeing and ask the question, is the AI bubble about to pop? So how do we know that Michael Burry is taking a bet against AI? So every quarter, major hedge funds have to publicly disclose their holdings in a document called a 13F filing. And Michael Burry's fund, Sion Asset Management, just released its filing for the third quarter of 2025. The documents reveal that Burry has made two huge targeted bets. He's not shorting the whole market, he's using put options to bet directly against Nvidia and Palantir. Let's break down why this is so significant. A put option is a bet that a stock will go down. By targeting Nvidia, Burry is challenging the single most important company in the AI ecosystem. He's betting that its trillion-dollar valuation is unsustainable and that its monopoly on AI chips is either at risk or has been wildly overpriced by the market. Now the shot at Palantir. At the same time, he's shorting Palantir, a leader in AI software and data analytics. This is a bet against the application layer of AI. It suggests that he believes companies like Palantir aren't converting the AI hype into real sustainable profits fast enough to justify the sky-high stock prices. This is a two-pronged attack. He's betting against the picks and shovels, that is Nvidia, and the gold miners, that is Palantir. He is arguing that the entire AI gold rush is built on a foundation of pure hype, creating a bubble just like that of the housing market in 2007. And when you look closer, you start to see the cracks that he is seeing. But he is famous for seeing things other people miss. So, what are the warning signs he's seeing now? There are three big ones. Sign number one, the smart money is cashing out. The smart money is quietly leaving the party. In early November 2025, SoftBank, the massive Japanese tech investor that runs the Vision Fund, sold the last of its Nvidia stake. They were one of the earliest and biggest believers in Nvidia. For them to completely cash out signals they believe the stock has peaked. They are taking their winnings and going home. Second, the valuations are astronomical. Let's use a simple analogy. Imagine you're buying a house. A normal price might be 20 times the annual rent. Now imagine paying 100 times the annual rent. That's what's happening with some of these AI stocks. Many of these companies are trading at 50, 80, or even 100 times their annual revenue, not profit, revenue. To justify these prices, these companies can't just grow. They need to achieve flawless, uninterrupted, exponential growth for the next decade. There is zero room for error. The moment one of these companies misses an earnings target, the house of cards could collapse. And that brings us to the third warning sign. The spending isn't matching the profits. Every big company is spending billions on AI infrastructure. But recent reports show that many are struggling to translate that spending into actual revenue or cost savings. The promise was that AI would create massive efficiencies overnight. The reality is that implementing AI is slow, expensive, and incredibly complex. There's a growing profitability gap between the hype of AI and the reality of its financial return. Burry is betting that Wall Street will soon wake up to this gap. Now, to be fair, betting against this market is incredibly risky. And there are very good reasons why Burry could be completely wrong. First, this isn't the dot-com bubble. Back in 2000, companies with no revenue were going public. Today's AI leaders, Nvidia, Microsoft, Google, are some of the most profitable companies in human history. They have real products with real cash flow. Second, AI might be a true platform shift on the same scale as the internet itself. If that's true, the productivity gains could be so massive that actually justify the sky high valuations. We might be in the first inning of a 30-year revolution. And finally, we have to remember Michael Burry has been wrong before. He famously made a huge bet against Tesla years ago and missed out on one of the biggest stock rallies in history. His timing can be way too early, which in the world of investing is the same as being wrong. So what does this mean for founders and investors watching this video? The lesson from Burry's bet isn't to panic and sell everything. The lesson is to get back to fundamentals. For founders, the era of raising hundreds of millions of dollars based on a vision and a .ai domain name is coming to an end. The VCs who survive will be funding companies with real world traction, proprietary data, and a clear path to profitability. Your pitch deck needs a slide on revenue, not just revolution. For investors, it's a signal that the easy money has been made. The next phase of AI investing won't be about betting on the hype, it will be about picking the founders who can actually build sustainable businesses. So, is this the big shot 2.0? On one side, you have the biggest technological shift in a generation fueled by brilliant minds and profitable companies. But on the other, you have the man who saw the last crash coming, betting that human psychology, our greed, our hype, our FOMO has created a bubble that's about to pop. Michael Burry isn't betting against artificial intelligence, he's betting against us. And in a market driven by euphoria, that might just be the smartest trade of all. So, what do you think? Is the AI market a bubble or are we just getting started? Drop your thoughts in the comments below. And if you want to stay ahead of trends shaping VC and tech, make sure you're subscribed to VC 10x. We break down the stories that matter every single week. Thank you for watching VC 10x.